Hey, Finzergy family, welcome back to the channel. And today I've got something you've been asking for. How to invest with little money. You don't need thousands of dollars to get started. In this video, I'll show you how you can begin investing right now and start building wealth, even if you only have a few $100 to start with. So, if you're ready to take your first step toward financial freedom, hit that like button, subscribe, and let's get started. 1. Why investing is crucial for your financial future. Before we jump into the how, let's first talk about why you should invest. The reason is simple. The money you keep under your mattress loses value over time. Inflation erodes the purchasing power of your money, meaning the cash you save today will be worth less tomorrow. By investing your money in vehicles that generate returns, like stocks, mutual funds, or real estate, you can outpace inflation and grow your money over time. Those small savings that may seem insignificant today can turn into a significant amount in just a few years. And the best part? You don't need to be an expert or have a lot of money to get started. 2. Investment options to start with little money. Now let's get to the important stuff. How can you invest with little money? The good news is there are plenty of accessible options for people who are just starting out and don't have a lot of money. Here are some of the best options for beginner investors. 1. Index funds, ETFs. Index funds are an excellent option for investing with little money. They are investment funds that track the performance of a market index, like the S&P 500. This allows you to invest in a diversified portfolio without having to buy individual stocks. Why are they a great option? Because you can start with as little as $50 or $100, and they also have low fees. Plus, by investing in an index, your money is spread across many companies, which helps to reduce risk. 2. Robo-advisors. Another great option for new investors is robo-advisors. These are automated investment services that create and manage a portfolio for you based on your goals and risk tolerance. Acorns and Betterment are popular examples. The minimum investment can be as low as $5, and it's super easy to set up. 3. Fractional shares. If you don't have enough money to buy a full share of companies like Amazon or Tesla, don't worry. Platforms like Robinhood and Fidelity allow you to buy fractional shares. This means you can invest in big companies with as little as a few dollars. 4. Low-cost mutual funds. Mutual funds can also be a great option when starting with little money. Many funds allow you to start with low amounts, such as $500. These funds pool money from multiple investors to buy stocks, bonds, or other assets. The good thing about mutual funds is that they are diversified, which helps to reduce risk. 5. Real estate investment trusts, REITs. While buying a property can be expensive, REITs, real estate investment trusts, allow you to invest in real estate without having to buy property directly. REITs invest in commercial and residential properties, and they allow you to earn passive income from a fraction of the cost. You can start investing with as little as $100. 3. How to set up an investment plan. Now that you know the investment options, it's time to create a solid investment plan. Here are some tips to help you get started. 1. Define your financial goals. Before you start investing, it's important to get clear on your goals. Are you investing for retirement? To buy a house? Or maybe to build a passive income stream? Defining your goals will help you determine the type of investment that's best for you and the timeline for your returns. 2. Determine your risk tolerance. It's also important to know how much volatility you're comfortable with. If you prefer safer investments, index funds or bonds might be a good option. If you're comfortable with a bit more risk, individual stocks or REITs could be a better fit. 3. Start small and grow gradually. The beauty of investing is that you can start with small amounts and increase your contributions over time. Even if you only invest $50 or $100 in the beginning, the key is consistency. You can always increase your contributions as your income grows. The important thing is getting started. For the power of compound interest. One of the most powerful concepts in investing is compound interest. This is the process where the interest or returns on your investments earn interest themselves. Over time, compound interest can turn small investments into large sums. For example, if you invest $100 and earn a 5% return, you'll have $105 at the end of the year. The next year, you earn interest on the $105, not just your initial $100. This means your money grows exponentially over time. The earlier you start, the more you can take advantage of compound interest. That's why it's important to start investing as soon as possible, even if it's with a small amount. The longer your money has to grow, the more it will compound. 5. How to avoid common investing mistakes. Investing is exciting, but it's also easy to make mistakes, especially when you're just starting out. Here are some common mistakes to avoid. 1. Trying to time the market. A lot of new investors think they can time the market and buy low, sell high. But the truth is, it's incredibly difficult to predict market movements. Instead of trying to time the market, focus on long-term investing and stick with your plan. 2. Putting all your money into one investment. Diversification is key to reducing risk. Don't put all your money into one stock or asset. Spread your investments across different types of assets, stocks, bonds, real estate, etc., to help protect your portfolio. 3. Panic selling during market drops. It's natural to feel nervous when the market drops, but selling during a downturn is often the worst thing you can do. Markets go through cycles, and downturns are usually followed by recoveries. Stick to your long-term plan and avoid knee-jerk reactions. 6. How to track your investments and stay consistent. Once you've started investing, it's important to keep track of your progress and stay consistent. Here are some tips. 1. Review your portfolio regularly. Check in on your investments every few months to ensure they're aligned with your goals. Don't obsess over daily market movements, but make sure your portfolio is on track. 2. Reinvest your dividends. Many investments pay dividends. Instead of taking the cash, reinvest those dividends to buy more shares. This can significantly increase the growth of your investment over time. 3. Stay consistent. The key to building wealth is consistency. Even if you only invest a small amount every month, the important thing is to keep going. Over time, those small contributions will add up and compound, leading to significant growth. And that's it for today's video on how to invest with little money. I hope you found this guide helpful and are feeling more confident about starting your investment journey. Remember, the most important step is to get started no matter how small. If you enjoyed this video, hit that like button, subscribe for more tips every week, and drop your questions or thoughts in the comments below. Thanks for watching, and I'll see you in the next one. Until then, stay focused and keep building your wealth.